Welcome to this IG Live special covering the Bank of England rate decision any moment now. Yesterday's unexpectedly strong inflation print has complicated things for the bank. To add to that, the crisis in the global banking sector. Now, all this leaves the Bank of England's rate setters stuck between a rock and a hard place. Hit pause for now until the issues in the banking sector sort themselves out, or raise rates to head off this suddenly shock inflation that has gone back up when people were expecting it to come down. Well, markets now appear to be pricing in a quarter-point rise, a response to headline consumer prices rising at their fastest rate in 45 years. Ahead of that, joining us now to chew on the fat is IG's very own Chris Beecham. Chris, do you think 25 basis points pretty much baked in?
It is, really. I think that's the only thing they can do at this point. Central banks find themselves in an awful bind. It's not just the BOE. We had the Fed last night, the S&P this morning, the ECB last week. Really, what can you do? You have to raise rates because inflation's making you raise rates. But you know the economy, if not teetering on the brink, is certainly heading in that direction. And we expect maybe a much darker economic outlook still. Really, last November, we were expecting a recession in the UK by about this time, maybe middle of the year. That's been pushed back. I think we're not in recession yet. But certainly, it still isn't great. And of course, the more you raise rates, the more you pile the pressure on borrowers, on mortgage holders, or indeed everyone in the UK, essentially, which does not augur well for consumer spending and the rest of the economy. So it really is the toughest place at the moment for Andrew Bailey and the rest. And it will be very hard, I think, to try and judge policy effectively over the next few months.
Now, Chris, what's your outlook for sterling? Of course, I'm looking at sterling ahead of that decision. Pound trading near 2-month highs. Where do you see sterling going from here?
Well, this is the thing. We've gone from sort of peak pessimism at the end of last year, or certainly into Q3 and Q4 last year when we had Liz Truss and all the crisis around that. And then the pound stormed back, and it hasn't done too badly this year, particularly. I mean, we certainly had a bit of a miserable February, but with the budget and the rosier outlook there, it's led to a bit of improvement in the pound. And I think a lot of what happens now is at the mercy of what the Fed does, and because they weren't too keen to hike rates last night, I think the key thing is that that has given the pound a bit of a breathing space, crucially against the US dollar, which has meant we've seen a bit of an upside here. As you say, though, we've last couple of days, really, we've struggled to make much headway. Getting back above 123 has been quite problematic, although you can see the pound is already beginning to rally ahead of the BOE decision. But it has been a decent recovery. The question is really how much further do we have to go on this? Certainly, if you look at maybe a half-hour chart, an hour chart, you've got a decent uptrend. So it appears to be buying on the dip at this point in time. But I think we do need a fairly solidly hawkish Bank of England to really give that a bit more upside and, as you say, push on back towards that 124 level.
Chris, whilst we're waiting for this decision any moment now, what do you make of the banking crisis so far? I mean, earlier on this week on Monday, we were in a very different place. No one quite knew what was going to happen. We had the banking crisis potentially becoming a bond market crisis. And then there was talk about, the cocoa's a wave happening there as well. And certainly many central bankers rejig their central bank wording, if you like. The mood music really changed. And now we're seeing a stabilization, really. So where do you think the Bank of England is placed in all of this?
Well, things have calmed down dramatically since Monday. Nonetheless, it is quite a tough outlook, really. I think it justifies the sort of caution you get. The fact you had SVB and then Credit Suisse following on two interrelated but not directly linked crises, I think, following hard on the heels of each other, meant that understandably people were very, very negative for this over the course of the last few weeks. Well, this has dropped out. If we talk about where we go from here, I think we do have to be perhaps a bit more cautious about the outlook because we are concerned that maybe things will get worse from here, at least in the medium term. And that's, I think, what's driving the problem for policymakers at this point in time.
Now, just a few more seconds until that decision is out there. As I mentioned earlier, if we get a hike as expected, 25 basis point to 4.25%, this would be the 11th rate hike in a row. Of course, the Bank of England is stuck between a rock and a hard place. On the one hand, consumption is really weak. The UK economy doesn't seem to be perking up as fast as it had hoped as well. And all those predictions about inflation coming down, well, we had that shock figure earlier on in the week. And we've just got that result out now bang on as expected, 25 basis point hike there to 4.25%. Just before Wednesday's shock inflation data, markets were split 50-50 on whether or not there would be a hike. Of course, the Bank of England doing what was expected by the markets, raising rates by 0.25% to fend off that higher inflation. Chris, early thoughts from you?
Well, it's as expected, really. There's not much the BOE can do, but you can see the pound already beginning to rally against the dollar. Crucially, this is the hourly chart. If we flip to, say, the 1 minute chances to get really short-term reaction, there is that bounce in the pound. So clearly there appears to be some desire for the pound to move higher against the dollar. And I think what we're seeing at the moment, if we can just see the hourly chart, is that it's a question of where the Fed goes from here, more than almost what the BOE does, because we know the Fed will continue to raise rates, but not the same pace. So I think the argument that yes, the Fed are raising rates and therefore the dollar should strengthen just ignores the fact they're not going to go as fast. Even though Powell didn't rule out further hikes, I think he couldn't rule out further hikes. The fact that the BOE is pressing ahead when many people thought they'd perhaps have to pause because of the weakness of the UK economy has been the surprise of this year. And that's why, if you go back to the daily chart as well, I think you do see maybe scope for further upside here, even with the Fed still saying they want to raise rates. There's been enough from the BOE on that front to say, yes, there is room for more upside. Indeed, the economic outlook has strengthened in a way that people didn't think really was possible just a few short weeks ago, even a few months ago, really. So I think that for the short term, and you can see there the pound once again just edging off the early highs there, it still suggests that maybe we do have more upside, certainly for the pound against the dollar.
Chris, just a really quick one before you go. What do you think is being priced in right now after that result? Are we going to see another little mini hike before too long, or do you think the Bank of England are going to hold off for now?
Well, this is going to be the fun part of the press conference, really, how they communicate a desire to keep fighting inflation even when you've got such a difficult period for markets. I think you will see further scope for more hikes. I think that will be the message from Andrew Bailey, is we would have thought about pausing perhaps, but inflation clearly has a long way to go. And we have a long way to go in our fight against inflation. So that's the big problem, I think, for the time being, and should come through in the press conference.
Right, my thanks to Chris Beecham there from IG. We're coming to the end of our coverage now of the Bank of England's rate hike. As expected, the bank raised rates by 0.25% sterling firming slightly to around the 12.307 mark. Prior to the decision was around 12.288 euro dollar. Staying pretty much where it was. FTSE also staying pretty much where it was before the decision. And that's all from us. Do join us later in the day when we have a look ahead to what's going to move markets on Friday.